good morning. You're watching The Market right here on ET Now with me, Aisha Farideen, and Tara Rai in the studio this time around, and of course, Avan Dabash as always.
Welcome to Mumbai, Nantara.
Your skies are grayer than Delhi.
Right.
How dare you complain about Delhi pollution?
And are you cold?
Not at all.
In a jacket and everything.
The AC. We have better air conditioning controls in Delhi.
No, but that aside, it's as smoggy for the market as well. At least the last week has been, right? And what an eventful week we are getting into. You've got, of course, big earnings, which continue to roll on. You've got SBI coming out with its earnings. After the budget, there's Tech Mahindra, there's Sun Pharma coming out with the numbers. And then, of course, Adani FPO ends. We've got a big clarification coming in from Adani Enterprises with regards to their FPO, with regards to the Hindenburg report. We're going to be chatting with the management right at 8:30 as well, as you can see on the bottom of your screens. Jikshinder will be speaking with us, the Group CFO, and of course the big event, the Union Budget in Feb 1st, and the FOMC outcome as well, which we're going to be reacting to, unfortunately, after the budget on Feb 2nd morning.
Absolutely. That's going to be in focus when it comes to the global cues. I'll just walk you through some of the rest of the global cues that we're reacting to this morning. Well, you did have Wall Street, which came off a pretty healthy winning streak. You had the market rally that has continued. The NASDAQ for the week gone by has gained about 4.3%. You had the S&P 500 adding about 2.5%. This is for the week gone by. And the Dow Jones about 1.8%. And yes, that's the one-day reaction that we saw on Friday's trading session. Yes, the FOMC meets Tuesday, Wednesday, and the Fed is expected to hike interest rates by 1/4 percentage point. And investors will also be closely looking at cues about how much higher the central bank could potentially take rates as it continues its fight against inflation. So that is very closely going to be watched out for. And you have the Asian markets. It's looking a little bit mixed this morning. Clearly, you do remember, have mainland China markets jumping on resuming trade after a week-long New Year break as well. So they are headed for a pretty strong run, and that's the SGX Nifty. Quiet as ever this morning, sub the 18K mark around the 17,690 level. But yes, Nayantara, we were talking about all the news that's surrounding Adani and lots of clarifications as well coming in.
Of course, last week that has, of course, been the big story, the Hindenburg report, which led to a complete collapse when you look at the share price of the Adani Group. All of that coming up for you on your screens. In fact, Ambuja also being barred from the F&O today. It's kind of price action that you saw on Friday. Top losers over there. Now, having said that, over the weekend, there was, again, lots of action. The Adani Group coming out with a lot of clarification at 8:30 a.m. right here on ET Now. Hear it from the Group Chief Financial Officer on the channel, clarifying on what all it is that the Hindenburg report has said. Hindenburg report in the works for nearly 2 years, but over the weekend what we've also seen is a rebuttal by the Adani Group. Point by point, it's come out with a 400-page document that it's also shared with the stock exchanges. Whichever way you look at it, because of the pressure that you've seen on the Adani Group, the kind of allegations that have been made, we are going into 1st of February, the budget week, with the Nifty below 18,000, the Sensex below 60,000, and on Friday, January 27th, worst day for the FIIs, the biggest sell-off that we've seen since April of last year.
But you know, the good thing is that all that had to happen with Adani names, and especially after the clarification sent out with the management, 8:30, like Nayantara also pointed out, we're going to hear more from the management. Like you said, point by point rebuttal to what the Hindenburg report had to say, the FPO going on course. They've not changed the pricing at all as the market was contemplating and anticipating. So it seems that there could be a massive recovery come by. Fortunately, this event
SGX Nifty is in the positive too.
Preceded, the budget itself. So, once uncertainty is out of the way. And because of all the clarifications coming in, we are going to see some stability come back for the broader markets ahead of the budget. So I think that, in a way, is a good sign.
And also, you also have the budget day volatility year after year as well, that we have seen it reduce. So maybe perhaps that could be expected this time around as well. But just to put into perspective the week gone by and how the markets really have shaped up, As Nayantara said, it was pretty uneventful in terms of the fact that there was that underperformance that was very evident in the markets. In particular, it was banks as well as those commodity stocks that really took a sharp knock. Autos, in the meantime, they did manage to post a strong Q3 earnings beat, and you did have the MSCI, which lagged the MSCI China by nearly 60 basis points. That's been seen in the last 3 months or so. The PE premium as well between the Indian markets and the Chinese markets, that's narrowed significantly. And we've seen the volatility as well on expiry day that has not shot up very sharply this time around. Remember, it took place on Wednesday. Largely inline set of numbers that have taken place in Q3 so far, and there has been short covering if there is likely to be any positive news on capital gains. But just to put into perspective, as we've spoken about, the budget day volatility really seems to be reducing year after year. To put that into a perspective, the proof is really in the pudding. In the year 2020, the volatility was about 450 points for the Nifty, 2021 700 points, and last year it was just about 350 points in terms of the budget day volatility in Antara. So maybe we will not see any sort of a decisive reaction either way on budget day.
Well, we're going into budget week, whichever we look at it, with a lot of reactions that have to take place, including, of course, the clarifications from the Adani Group, how the markets react to it. The Bank Nifty barely hanging on to 40,000. You have the PSU Bank Index falling 5%. It's going to be an interesting week. And then on the second, a day after budget, we all react to the US action.
Yeah, we do. That's going to be the big one. But let's also keep it with the budget. Here's Sridhar Sivaram from Enam Holdings telling us what he's expecting from the union budget this time.
If I connect the dots and, listening to what Mr. Bajaj had to say and, some of the other comments that we have seen, this is what I think may happen, that is basically talking of rationalizing the tenure for long term. So today, if you see, the long-term capital gains for equity is 1 year, for real estate and REITs is 2 years, and for debt is 3 years. So you're really talking of rationalizing this. It's highly possible that everything moves to 3 years. Okay, so that's number one. The second is that the difference between a long term and short term is only 5%. So you're talking of 10% for long term and 15% for short term. That seems too less. It's highly possible that 15 goes up, maybe to 20, worst case to marginal tax, but we'll know in the budget. The other thing is that the government is looking at rationalizing all savings products which are tax-free today. So they've already, sort of plugged the loophole with capital gains, with say insurance in Europe. There are other insurance products which are tax-free. So what we hear is that is the other possible tinkering around which the government could do. We don't know how this plays out and what all come. If the worst case comes in everything, then that's bad. Which is why I said that some bit is already priced in, and some bit is not. So we will get to know more on the budget day.
Hi, my name is Shashank Shrivastava. I'm from Maruti Suzuki, and I'll be taking a close look at the forthcoming union budget from the auto industry perspective. Auto industry, as you know, has had 3 really tough years, and in fact the last year was actually good from a volume perspective, but the challenges continue. So I'll be talking about the expectations from the industry regarding how to make growth a reality for this industry. So tune in to ET Now as I decode the union budget from an auto industry perspective.
Powered by 1 billion consumers, India has now emerged to be the world's fastest growing large economy. In this budget, will the Finance Minister announce measures and policy initiatives that will boost consumption in India? Join me, Nilesh Shah, as I analyze the budget on ET Now.
So leap ahead, Budget 2023 with ET Now. We get you the best of market voices, policy makers, corporate India. This should be your destination. Right, moving on is that time of the show where we invite our chartists on board, and we've got Naresh Marani here with us. Good morning, Naresh. We head into budget week with the Nifty hanging on to below 18,000. Look what happened with the Sensex, the carnage that we saw on Friday. Look what happened with the Bank Nifty too. What are the levels that you're watching out for this week and today?
So technically on the Nifty, 17,300 to 550 is a strong band of support, wherein that is where the rally started from after making a base around 16,800 in September and October. After that rally, what we've seen is now the 200-day moving average is also in this band. Also the fact that when we look at what has happened across the world, we've already corrected quite a bit and we are underperforming by a big margin. None of the risk parameters which we look at globally in terms of a risk of movement specifically starting have not triggered as yet. So the dollar index continues to be lower. Even the USD INR did not see much pressure in the last 2 days of correction in the Nifty. So overall, it seems like a localized issue and a lot of sentimental hit post the Adani announcements which have been going on all around. So overall, the view is we are getting into a phase wherein the next 2 days could be pretty silent. And budget day could be the start of the rally from here on. So I would wait for the next 2 days, not take a trade on the Nifty, unless one has a capacity to see 17,300 and digest it. So that's the only risk we have at this point, wherein we can go to 17,300, 500 band again over the next 2-3 sessions. But post that, we should see a stronger rally is the view.
Okay, that's the view coming in on the index. Naresh, let's get those top recommendations going. It's 2 buy calls and of course, you're sticking to the PSUs.
Yeah, so continue to like the whole PSU pack. So going with a PSU bank as well as a PSU. So first is a buy on SBI, which has corrected from 620 levels to 540. That's a good 10 to 14% correction in this market due to the announcements around it. But if you look at it technically over the last 1.5 year, 530 to 560 has been the band of support. That is the previous high. So almost the return for the stock for the last 1.5 year becomes zero, wherein in that period, small PSU banks have done really well. So this is an excellent opportunity for a medium to long-term entry as well. I would eventually expect the stock to even cross the all-time highs. So at these prices, that stock remains the best pick in PSU bank. So stop loss at 525 and a target price of 600. Second is a buy on GAIL India, which continues to hold on above the breakout levels. For the last 1.5 year, 5 to 6 attempts around 85 held on. For the last 3-4 months, 99 was a breakout point, which it is trying to hold on to. So expecting this to go towards 110, 115 in the short term. A stop loss at 95.
As the India growth story charts its course, this budget has the potential to be a game changer.
We will continue our journey with strong growth.
Amidst geopolitical uncertainties,
our country is facing economic crisis.
Crude oil prices briefly topped Western ban of Russian oil.
India shines as a proverbial bright spot with a stable government at the center.
ये बजट अर्थव्यवस्था को मजबूती देने के साथ ही सामान्य मानवी के लिए अनेक नए अवसर बनाए.
This will be the last full-time budget by Finance Minister Nirmala Sitharaman before 2024 general elections. What will this budget mean for the aspirational India as India looks to leap ahead? Join us for expert views, extensive coverage, incisive analysis of Budget 2023-24 as we decode how this budget impacts your wallet. ET Now. Rise with India.
Okay, and here's Nilesh Shah from Kotak KMC, who believes that the budget, like the last budget, will enhance allocation to infrastructure projects.
Undoubtedly, this budget, like last budget, will enhance allocation to infrastructure projects. The budget will also have to look at the poor people and bottom of the pyramid where consumption is slowing down. I also hope to see from budget certain announcements related to containing of trade deficit, which is running at a fairly higher number. Overall, it should be a progressive budget like last time, which pushes India's growth to higher level and at the same time assures investors about path to fiscal prudence.
Okay, so that's Nilesh Shah with his budget wish list. Let's stay with the big event and what the levels are looking like for the markets that you need to watch out for, especially after the bloodbath on Friday. Can things look better? Let's go across to our second chartist also now joining us. Rajesh, good morning. What are the levels that you're watching out for, finding support around 17,500 for the Nifty? What about the Bank Nifty?
So overall, looking at the setup for Bank Nifty and Nifty, both are looking, weak at the current juncture. And looking at Bank Nifty setup, we are almost near to the important support area on the Nifty at 17,500. If at all we breaks below 17,500, then possibly Nifty can go further down towards 17,300, even 17,200 level also. So the view is still bearish until Nifty not crosses above 17,800, 17,900 level. We'll see a sell on rise kind of strategy in the Nifty. Looking at the Bank Nifty setup, 40,000 is the crucial support area. If we breaks those levels, then possibly it may go down further towards 39,500. Though both the indices are in oversold trajectory on the near-term setup. So going short at current level is a bit risky. Let the market to give some pullback action, then only one can initiate short. At the current level, we are not advising to go short at the current level because already it's in oversold trajectory, and we might see some pullback action in day 1 or 2. So 40,000 is important level. If at all we hold that level for Bank Nifty, then possibly some pullback action we can see. But again, on the higher side, 41,000 is likely to act as a resistance area for today's trade.
Let's find out some top recommendations as well then. And Rajesh, what makes it to your list after the kind of carnage that we witnessed on Friday?
So first stock is that is ITC. Stock is showing strength. In the previous session, we have seen strong price action as well as the downsloping trend line breakout has been there on the ITC stock. So looking at the overall setup for ITC, we believe that ITC can continue further up move, and we are projecting target of 360. Keep stop loss of 335. Another stock is from automobile space, that is Bajaj Auto. So Bajaj Auto has also given a good up move in previous week, and looking at the overall setup for Bajaj Auto, we believe that this stock can continue because overall automobile pack was a bit positive in terms of price action in last week also. So looking at overall setup for automobile space, we believe Bajaj Auto can continue furthermore up move. 40,000, 4050, 4060 could be the possible target on the higher side. One can buy with stop loss of 3870.
Okay, Rajesh, stay right there. We're going to come right back to you, get in our fundamental experts, tell you all about the stocks in focus as well this Monday morning. But all of that after this very quick break.
Right, we're of course in the thick of earnings season as well. A lot of counters to talk about, from a Bajaj Finance to a Vedanta. Let's put the spotlight on Vedanta now. That stock was down nearly 2% going into its earnings. Its net profit has plunged 41% to come in at 2,464 crore rupees. A plunge of 41%, and there's also a dividend of 12.5 rupees a share. The fine print. Our colleague Ashish is standing by to tell us more about. Ashish, obviously, is a counter we'll be watching out for. What happened?
Yeah, so weak commodity prices did lead to decline in numbers on both on a quarter-on-quarter basis as well as on a YOY basis, but the numbers are well ahead of what the street was working with. In fact, we look at the numbers, revenues have come in at 34,100 crores, which is a downtick of about 7% on a sequential basis. EBITDA margins, meanwhile, have contracted by about 28 basis points. They stood at 20.7% in the quarter gone by. If you look at the fall in commodity prices, important to note that aluminium prices declined by about 2% on a sequential basis, and crude and zinc prices also declined by 9% and 7% respectively on a sequential basis. But the cherry on the cake this time around was the dividend. The company has gone ahead and declared a fourth interim dividend of 12.5 rupees per share, and the total cumulative dividend for FY23 now stands at 81 rupees per share, which is much ahead of the total dividend that the company had declared in FY22, which was about 45 rupees per share. In fact, JP Morgan has come out with a note on Vedanta where they are maintaining their overweight rating on the stock with a target price of 350 rupees per share. They say third quarter numbers were well ahead of what they were working with, and the numbers did benefit from one-time gain. So all in all, good set of numbers, and JP Morgan has also maintained its overweight rating.
Thank you very much, Ashesha, for giving us all of those details. We'll be watching out for that stock in today's trading session. In the meantime, let's get in a take then on the financials as well that came under pressure on Friday's trading session. And Naresh, what's the verdict on some of the large cap names like ICICI, IndusInd, Kotak and Axis?
So a lot of these banks have seen a sharpish correction in the last two sessions, and a lot of support levels have been broken in some of them. So a lot of stocks like IndusInd Bank, which was at one point of time just a few days back closer to trying to make a breakout move about 1250 levels. The stock is back to that 1100, which has been a support mark for the last 4 months. So would wait and watch here. 1050 to 1100 should act as a support. Once we make a base over the next two sessions, it would be more clear. But technically, I don't expect a further breakdown in both these names. So ICICI Bank is now back closer to the 200-day moving average. Has already corrected quite a bit from 950 levels to 820. The last breakout point for the stock was closer to that 780 to 800 mark. So at these prices, the downside seems to be limited. So a lot of these large cap banks have already seen a 10 to 15% correction from the tops. So earlier they were drifting, and then the last two sessions we've seen a sharp correction. So my view is over the next couple of sessions is a good time to actually accumulate all these large banks. And I would expect a sharp up move post the budget.
All right, now, Adani Group of stocks got smoked on Wednesday, then on Friday. Now, the puzzling part for the market is that if the stocks are down and if the Adani Enterprise stock price is currently below the FPO price, what gives the confidence to the management that they want to go ahead with this mega fundraise? Why should retail investors subscribe into it when the issue is down? What about the allegations which have come out from the Hindenburg report? All that and much more needs some directional and some clarity. And let's take that forward with the group CFO Robbie Singh to understand that what really has led to this straight line fall in the stocks. Robbie, great to have you back on ET Now. Thank you for joining us. Robbie, the stocks of Adani Group, they've got smoked. It's been an excruciating fall. Billions of dollars of market cap has got eroded in just 2 trading sessions. What has led to this fall? Short selling, or this is more than short selling. It could be large institutional investors who've decided to sell the stock in last 2 days. So tell us the inside story. What has led to the stock fall?
I'll answer the second part first. Have we seen any exit of large shareholders? From the data that we have as of the weekend, the answer to that is no. A lot of our large institutional investors are long-term strategic intergenerational investors. So they see the wealth creation in a utility platform over a generational period. And there, because all of our entities, public companies, 9 we have now, they are primarily into the core infrastructure that is required in India. And so those entities are their business has not changed independent of the share price movement. So therefore, there will be, we don't expect it, and neither has there been any movement in the long-term strategic investors and their positions. On the first part of your question, yes, the short-term volatility happened and the share prices have consequently changed, but again, because the fundamental business has not altered in any way, we believe that this volatility will pass. In a week's time, our quarterly results will come out and people will see that the group continues on its upward trend. And therefore, we believe that over a period of time, it will be seen that we are a core infra utilities platform, and therefore on a weekly basis, our cash flows doesn't alter. So give you an example, a point here. Every week on average, our portfolio makes about 1100 crores. This Sunday also that number was achieved. Next Sunday it will be the same. The following Sunday it will be the same. So we believe that that it will become clear to investors, and this short-term volatility will be addressed as we go through over the next few months.
Robbie, now the Hindenburg report has raised 88 concerns. I'll talk about some of the big concerns. The leverage. And the leverage concerns have been, the leverage concerns about Adani Group have been discussed in the past as well. So let's take that forward. In last 4 to 5 years, your debt has doubled, but over a similar time, the listed companies and the leverage ICR has improved. But what about the debt at promoter level? If you can just, give more clarity on that where is the leverage situation?
Yeah, I think as correctly highlighted, as it is this report, I will come to that. Even this report couldn't find anything with the asset and performing of our businesses. So they talk about promoter level. Promoter level debt, we hardly borrow on a corporate basis. So at promoter level also, we don't borrow much. At a promoter level, we are net lenders to the market. So therefore, that on a corporate basis also, we don't have much debt. On promoter basis, we actually, as I explained, we are net lenders. So it's completely unsubstantiated speculation that we have huge amounts of debt at promoter level. We are one of the few groups that formally declare its total pledge position also on a regular basis, on a quarterly basis. It goes out as part of our credit report, which goes to all investors, all our banking partners, all shareholders, even independent directors. So the informed investor base is very clear that we don't have this. So this report, to that extent, is mere speculation on that point of debt. And on other aspects we'll discuss, but as we go through this period, it has to be recognized, and I would like to clarify for the public that our large companies, say Adani Transmission or Adani Port or Adani Green or Adani Total Gas, their credit profile is similar to that of the government sovereign companies. We are the highest rated infrastructure portfolio in the country, with the exception of the Government of India. So I think this has to be seen in that context. We are very comfortable with this, and therefore we believe that it is completely unsubstantiated rumor mongering, although it affects us temporarily.
The report also talks about stock manipulation by Adani Group of companies through offshore shell companies, and they've been specific there. How would you like to respond to that?
False.
Saying that the report, which is claiming that 5 FIs have invested in Adani Group of companies, have got nothing to do with the promoter entity, because the report talks about the fact that these entities are controlled by Adani Group.
No, it's nothing to do. Our promoter shareholding, both for India, and we hold some of our shares from overseas. In our Holcim transaction, when we issued the open offer document, the entire structure of our overseas holding is fully disclosed. Our domestic holding structure has been disclosed in many, many documents for the past 12 years, in public documents for investors. So therefore, to anything beyond that, that we have fully disclosed in our offering documents for investors, for regulators, for everybody, is mere speculation. And we cannot answer to speculation, because this holding structure from family trust, intermediate companies, and companies that hold shares, be it domestically, be it Dubai to Mauritius, etc., is fully disclosed in a comprehensive manner. And so therefore, to allege, to speculate that we control some company or don't control some company, I am not aware, nor do I have any reason to believe that that is the case.
The report also is raising a serious concern that the financial numbers are inflated. There are inter-party transactions. As a result, the financial numbers are bloated. How would you clarify on this? Because this is a serious charge.
I think they raise a specific question. They ask, and we have addressed this in our report, in our rebuttal to that report. Now, this is a specific question they asked. They said that in relation to Carmichael Rail, I'm aware of this because it's part of AEL. In relation to Carmichael Rail, that we transferred an asset to a private company, and then the private company immediately wrote down the value of the asset. So their implication is that we overinflated Adani Enterprise revenue by writing off the asset in a private company. And this is the malicious nature. That's what my media statement, because I knew this at that point in time also. This is the malicious nature of this report, which is borderline lying. It is certainly a misrepresentation. First, we actually disclose this ourselves, that this is a related party transaction. Then we disclosed fully how the transaction was done. Now, if somebody claims 2 years of research, they would have known that this asset, when it was transferred, it had its accounting treatment known in Adani Enterprise. So they could have seen from the same note that in Adani Enterprise, we had already written down the value of the assets and charged it to the P&L as a loss. They knew this, and yet they still published this question knowing this. Now, I'm saying they know this because they claim they researched for 2 years. Now, if they did not know this, then it is just purely ignorant and malicious. If they've knowingly done this, it is a case of genuine falsehoods and misrepresentation. So this is a clear example which we have highlighted and we have made public in our response, which is well over 400 pages, fully annotated, and we have attached the documents so people can verify themselves that 68 out of 88 of these type of questions they have asked us.
The stocks of Adani Group of companies have fallen. Are there any margin challenges? What are you getting? And if the stocks, they fall down more, could there be a margin gap which could create a snowball effect if these stocks go down?
We borrow very little at the promoter level, and we declare it, and therefore the coverage that we have in relation to that borrowing, one, we have cash to actually not and pay the borrowings, full stop. So therefore it is completely baseless that there were margin calls. Before margin call, we'll just pay and borrow and completely retire the shareholder loans.
Okay, the FPO, the fact that the Adani Group has decided to go ahead with the FPO of Adani Enterprises, what gives you the confidence that the issue will sail through? And I just want to put things in context for our viewers here. The stock price of Adani Enterprises as on Friday was 11% lower than what the FPO price was. What gives you the confidence that you will get enough and more demand and this mega fundraising will sail through?
I think the FPO is, as you know, it's a three-part process, and we deliberately selected FPO because we wanted to make sure and achieve certain outcomes. One, broader institutional participation, broader analyst coverage, and actually broader HNI and retail participation. Now in the current situation, or due to the volatility on Friday, the price is below the retail target price. So we expect that retail participation, we'll wait to see how it goes. But the long-term investors see the value of Adani Enterprise differently. So they are fully committed for the FPO. And we have no information that that has changed. So therefore we are moving ahead because we believe that with our institutional and strategic investor base, that the offer will anyway be fully subscribed. Now, and that's why we clarified that FPO is proceeding as normal. And the reason the confidence comes is because the way investors look at, long-term investors look at AEL value. AEL value is not in the share price of AEL. It is just a holding value. The real value of AEL is in its incubating assets. This is Adani Airports, Adani Data Center business, Adani New Industry Green Hydrogen business, Adani Roads, Adani Digital Labs, Adani Wilmar, and our mining services business. Those businesses are still performing as they are, and they have still the same value. Now that value will be exercised when we demerge this business in the next 4 to 6 years. So for long-term strategic investors, that's what they are aiming for, and that value has not changed because that's not the representative of the AEL. AEL share price is not representative of that value fully. It's a discounted value. But so long-term investors comfortable with the underlying value. Retail investors naturally will see some pullback, but even some ultra HNI and HNI will participate.
So Ravi, I just want to get this one right. The FPO is still open, and markets will open on Monday. So irrespective of what could happen to the underlying stock price, you are going ahead with the FPO, you're not changing the price, and you are reasonably certain that the FPO will sail through.
No, we are very confident of it.
Okay, when the FPO document was initially shared in the public domain, Adani Group did indicate that one of the reasons why they want to go ahead with an FPO is that they want the retail participation in Adani Group of companies to increase. Now, why should retail investors really subscribe to the FPO? Because if the underlying price is much lower than the FPO price, then for a retail investor, frankly, the motivation to subscribe into the FPO will not be there. So don't you think that entire purpose of increasing the retail shareholder base will get defeated?
Correct. Our objective on the retail investor base is twofold. One, obviously, we want to spread out the share register, which is our objective, and we'll do that over the next. As I mentioned, that in the first phase of our strategic plan, we expect to complete that by 2025, 2026. Now, in the short term, naturally, there is some change will happen because of the possible pullback of retail investors. But it's very important for us to understand why we wanted to aim for the retail investor. See, we are being in infra and being asset-based company. It is very important that Indian public own its own assets. So in our case, see, it's very different. When you go to Mumbai airport, it would be good for the person going to Mumbai airport to own some shares because it's their asset. It's assets of India. Indian public must participate, and we want to encourage that participation. So it's a bit of disappointment that you will have some pullback. But in the longer term, we believe our objective to continue to encourage Indian retail investors will pay dividends, and the wealth creation that Indian investors, retail investors, mom and pop should enjoy from Indian assets will occur, and that is one of the key objectives of our founder and us. Therefore, that the public should participate in the wealth creation of hard, real assets in the country.
Okay, let's talk about Ambuja and ACC, your recent big acquisition. Adani Group used the leverage vehicle to acquire. It was a large acquisition, so the leverage route was used. On Friday, the stock price of Ambuja cracked below the acquisition price. So is there a leverage stroke a margin issue there?
Yeah, we don't have Gujarat Ambuja's shares were never pledged, and we had clarified at that time also. It was a representation based on the very technical definition that SEBI has. The shares are never pledged. There, the way the acquisition of that nature is accomplished, it is done in the nature that we tell to our bankers and debt capital providers that we will hold a minimum number of shares, not value of shares. So there we are not seller of our equity. So we said we will own 63% of what the precise number slips me, about 63% of Ambuja shares, which we own. So it's nothing to do with it's not a loan against shares. They're not pledged in any way. It's a security package, which is different from pledge. But that is counted in encumbrance by SEBI, and that's why there was some misunderstanding and people misreported that as pledge.
Robbie, did you get any feelers from institutional investors that they want you to reprice the issue, or are they fully committed to subscribe to the FPO at the original price? Because institutional investors are also very, very price sensitive.
It's not for us to give a discount. I think important for us is that there's a value equation here, and the value equation is based on the sum of parts of real assets being developed, and we evaluated carefully the events last week, and the consensus feedback was that you please go ahead as planned, and that's what we are doing.
Now, what's happened to the stock price, Robbie? We can argue and say, look, it's happened in the secondary market, it's sentiment, it's technicals, it's compulsions in nature. But can I say that from a business standpoint, irrespective of what has happened to the stock price, Adani Group will go ahead with its CAPEX plans. There would be no alteration there. There are no debt obligations which could create challenges in the short term, and it is business as usual for Adani Group of companies, irrespective of the stock price plunge.
Absolutely. We are in a position where, like I said, last week we made EBITDA portfolio level 1100 crore. Next week it will be the same. Week after that will be the same. We are non-discretionary consumer spending portfolio. So therefore, underlying businesses are as they are, super high credit quality, massive cash flows, and therefore underlying business, even their growth trajectory is not impacted by this, let alone anything else.
All right, Robbie, good luck.